Good morning and welcome to Broker Briefing, Australia's premier digital platform for brokers and investors, live streaming video presentations from ASX listed companies. I'm Jane Morgan and thank you for joining me today for our April Mining and Resources Investor Webinar. Today we'll be joined by 6 companies: Impact Minerals, Tempest Minerals, Vulcan Energy Resources, Magnum Mining and Exploration, Cannon Resources, and Apollo Minerals. So up first, we are joined by Impact Minerals with the ticker code IPT, a diversified Australian exploration company. To tell us about their projects, today I'm joined by Managing Director, Dr. Mike Jones. Good morning.
Yeah, good morning, Jane, and great to be here. Just to share my screen and just make sure that everyone can see that.
That's perfect. Thank you.
There we go. Thanks very much, Jane, and thanks for everyone coming on to listen to all these stories today. Very exciting time to be in the market. Impact Minerals, we are a junior explorer. We are here to find a major world-class discovery, and in the last 18 months, we've managed to transform ourselves from an Eastern States-focused company to a West Australian-focused company on the back of the Julimar discovery by Chalice Mining. And we've been able to establish a total of 10 projects in that time, covering about 4,000 square kilometres. So we're early stage, certainly compared to the other stories today. But our track record is that we have been accumulating ground around Australia over the years we've been in business, large strategic ground holdings in very prospective parts of the country. And we have a Commonwealth project in New South Wales in the Lachlan Fold Belt. We have Broken Hill, a major ground holding there. And as I've just said, we've put together a very strong portfolio in the last 18 months here in WA, looking for strategic metals, battery metals, so nickel, copper, PGMs, obviously lithium and rare earths, but also we've got some good gold projects as well. So a little bit about the company. We've been listed since 2006. We have just over 2 billion shares on issue. Share price around about 1.2, 1.3 cents, giving us a market cap sort of in that high 20s. Cash 2 million, but we have just launched a renounceable rights issue, which I'll talk about at the end, and certainly something to keep your eye on over the next couple of weeks. And you can see we've had tremendous volume in the last month or so. That's been driven by the drill programs that we've got going on at the moment on our Hopetown project down in the south part of WA. So we've been rationalising our Eastern States portfolio, so I won't dwell on that, but I just wanted to show you Broken Hill. The scale at the bottom here, 10 kilometres. We're the largest ground holder probably around the world-class Broken Hill mine, but most of the activity has been focused on high-grade PGMs, nickel and copper in the tenements coloured in blue here, which we recently joint ventured out to IGO, and that's one of our strategies, is to look for major companies to come in and joint venture into our projects. And we have one underway at the moment with IGO. The overall deal is 18 million over 8 years to earn 75%, which is a tremendous amount of money. And they're currently spending a significant amount of money on a deep penetrating EM survey, probably leading to stage 1, 6 million to earn 51%, and then 12 million to earn a further 75%. And some good news is that they found a very significant conductor shown here on this map down at the southern end of this 9-kilometre long trend called the Morkai Trend, which is basically dripping with PGEs and nickel and copper, but has only been explored over the last 30, 40 years in the southern part of the area around Platinum Springs. And this is some of the massive sulphide we intersected a few years ago now. And it is probably the richest ore in Australia. If you look at some of these grades here, 0.6 metres at basically an ounce of platinum and palladium. It's got some gold in there. It's got 15% combined nickel copper, ounce and a half of silver, it's got cobalt, and 1 to 2 grams of some of the rare platinum group elements. And you can count on the fingers of one hand where this type of material is found around the world. Anyway, this material here is very conductive, and IGO identified a conductor possibly in a feeder zone to this body here, this intrusion, and they'll hopefully be drilling that later this year. The EM survey is still in progress. They've only completed about 80% of it. So lots of news to come from there. But shifting really to WA, just one quick slide. We drilled our Dunia Gold project earlier this year. It's a joint venture. We're earning 80%. And we're not far from the Burns discovery of Lefroy, which is, this is a picture from Lefroy, some very unusual magnetite copper gold mineralisation, very unique. We think we've got the same geochemical signatures here. we've managed to get 4 or 5 drill holes into a target. It was logistically difficult for drilling. Those assays will be coming through shortly, and I think there'll be some follow-up work that needs to be done there. But really, the main focus and what we've managed to do in the company over the last 18 months is we've put together basically 10 projects covering about 4,000 square kilometres in this southwest part of Western Australia, which has been an emerging mineral province certainly for battery metals on the back of the Julimar discovery by Chalice just north of Perth here. We own 3 projects 100%, Dinnunup, Bow and Arkin, and we recently announced 4 joint ventures, Naria, Dalgaranga, Jumbo and Hopetown, which is where we're drilling now. And a lot of that's been driven by a new geophysical technology that we've been trialling, and it's been some very successful results so far. Just a quick look at Arkin. Here's the project area shown in white with our Bow project just to the north. The day that we announced this pegging of this ground, Anglo American came in and staked 10,000 square kilometres around us. They obviously were interested in this ground. We just managed to beat them, pit them to the post. And they've got a massive EM survey going on at the moment, airborne EM survey, spending about $4 million on that. And we're tagging on the back of that, and we'll have an EM survey going middle of the year. So this whole area and part of the southwest terrain, as I said, becoming a very significant province for a wide variety of strategic metals. We're the first people basically to do any significant detailed exploration in this area. We did some soil sampling along roads and tracks and managed to identify 6 priority targets, plus 4 or 5 other medium priority targets. And basically this is a summary map of all the anomalies for nickel, copper, platinum, palladium and gold. 6 priority areas. We've completed follow-up sampling on 1, and we've been doing land access negotiations to get into some of these areas here, and we'll be starting soil sampling in the next month or so on that. And all of them are very significant anomalies. We could only get along tracks, gazetted roads and tracks, taking samples at 100-metre intervals. And we can see here in this northeast top right-hand corner, these circles here are 100 metres apart, and these anomalies are running for hundreds of metres along trend and across trend. Never been drilled, never been any follow-up work done, and so it really is virgin territory, and this is a ground floor opportunity. Whilst we were doing that work, we were fortunate enough to also identify a significant number of lithium anomalies, LCT, lithium, cesium, tantalum, pegmatites. Same story, some images here over the magnetic data. The lithium anomalies are running for hundreds of metres along these tracks and traverses. Again, never been explored for lithium, and so this really is some virgin terrain. On the back of that, one of the joint ventures we announced is our Jumbo joint venture, shown here, Arkin shown in the white and Jumbo in the yellow. And again, first fast traverses through here, again, following up some of this new geophysical technology. We identified some significant rare earth, rubidium anomalies, as well as nickel, copper and lithium. And this is a function of having large ground holdings in an area. You're going to find more than what you started out looking for, and that's certainly been the case on our projects in this area. So look, we're repeating the same process. Our target generation is working really well. I probably expect within 6 months we'll have well over 50 drill targets identified. It'll be a portfolio that's probably second to none in our sector. So at the moment, we're drilling one of our joint ventures down at Hopetown on the south coast of Western Australia. And we're drilling here because we had 2 targets, Top Notch and Silver Star, that were fully permitted for drilling once we got into the area, testing a few things like the geochemistry, some of the geophysics. We've had some sniffs of copper at Top Notch, but we're drilling at the moment at Silver Star. And we announced a couple of weeks ago that we've intersected an altered shear zone. It's about 25 metres true width. It's got some minor sulfide. Really don't know what we're going to find in it. We're hoping for some gold at least. Those assays won't be back until June. The core has just arrived in Perth. However, based on what we've seen, we're starting our second drill hole tomorrow. The drill has been on break for a week. Geologists are heading down there today. And so we're very excited to see what's going to happen in the up-dip of that shear zone over the next couple of weeks. We also identified lithium, and there's a nice coloured picture here of spodumene. It fluoresces in ultraviolet light. It gives us a very distinctive pink colour. And this is the first lithium basically found south of Ravensthorpe. So the Hopetown area, we believe, is a southern extension of the Ravensthorpe greenstone belt. There's an active lithium mine here, Mount Catlin. There's some dormant nickel mines. First Quantum have got their nickel laterite mine there, and Medallion Metals have got their copper, gold and Trilogy deposits here. And we think we have the deformed extension of that material here. And so a very exciting place to be. Never been any drilling down south of this fault zone here to cut up, only shallow exploration holes for geochemistry. So super opportunity, and there is time for anybody to be involved. The rights issue we just announced, it's a renounceable rights issue. You can buy the right to buy the shares, which are open to all shareholders. It's a 1 for 4. It's a 1.1 cent purchase price, but you get a 1 for 2 free attaching option, exercisable at 2 cents over the next 2 years. And if you looked at our share price graph, we were pretty close to 2 cents only a couple of weeks ago. So this is a very attractive proposition. And you can buy those rights until May the 13th. There's the code, IPTRA, and a fantastic opportunity to participate. I'm trying to fund myself for the next 2 years because I do think difficult times are approaching us. And I want to be fully funded. I've been around too long to wait for cracks to appear in the financial system. They may or may not appear, but I think that's what's coming. So lots of news flow. Please come on board, and thanks for listening this morning.
Mike, thank you for that great presentation. We've got a few questions, so I'll jump into them. So drilling results, when are you expecting them coming through from Hopetoun?
So the core has only just been cut, just arrived in Perth. No core cutting facilities down there. We hope to get the key parts off to the lab by the end of next week. So we're probably looking at June, I would say. I wouldn't get more specific than that.
Perfect. And with such a diverse project portfolio, what is it that excites you the most?
Well, Hopetoun right now, because obviously we're getting some sniffs of success. But really, Arkham, I think, is our flagship project. It's a large ground holding. We've generated a significant number of anomalies from our early stage work. Only difficulty working the wheat belt, land access agreements and the harvest. So things will be pushed back in terms of drilling till later in the year, hence the focus on Hopetoun.
Wonderful. Well, thank you for your time today, Mike. We appreciate it. We look forward to further updates.
Thanks very much, Jane.
So up next, we have a presentation from Tempest Minerals with the ticker code TEM, a WA-focused mineral exploration company. To tell us more, today I'm joined by Managing Director, Don Smith. Good morning, Don.
G'day there, Jane, and thanks for having me. And also thanks to the other presentations, including Mike, who I think has got a very exciting story. Sharing my screen. That is working, correct?
It's just loading up now. Sorry, it's not, doesn't seem to be popping up.
I apologise.
Perhaps maybe stop sharing and start again, yeah.
Still?
Just still says it's loading through. It's always the way, isn't it? Technology.
Apologise.
It's okay. Something seems to be coming up now. Maybe if you scroll through to the next slide.
Yeah.
Okay, there's something you're just going to have to get rid of the, I think there's a bar just sitting next to you. If you just move that bar out of the way, that will hopefully move everything across. It looks as though the footer bar might be just covering the presentation.
There is no footer bar, that's curious.
Is there something just on your screen that's covering over the top of the presentation at all?
The Zoom meeting is there.
Can you maybe move that? Perhaps that's what the issue is. We apologise, attendees. We did a run through of this earlier as well, and it didn't have any issues. John, it's actually still there. Would you like me, maybe just stop sharing again and we'll try again one more time? Oh, hang on, something's happened there. Did you minimize?
Yes.
Do you want to just move? I think that's the panelist view. If you can just move that panelist view out of the way.
Yeah, it's
that's
gone.
what's coming up. Yeah, and then we can start again now if you just want to re-share.
Wow.
There we go.
Okay. Sorry, everyone.
All right, off you go. You're on the disclaimer slide here.
Good. All right, very quick update on the company. We listed in 2017 as a pure lithium company.
John, it looks as though that's not working again now. Perhaps I might just share your, no, okay, you're on the corporate overview now.
Yeah, great. Okay. So background behind Tempest is that we listed in 2017 as a lithium exploration company, and we picked up a great portfolio of projects in Mount Magnet and Yalgoo in 2020. Since then, we've been doing some very solid exploration, and in recent times, we had some market attention based around our Malaya project, which we'll get to in a moment. You can see we have just under 500 million shares, so still very tight. And we recently completed a nice capital raising where we raised a bit over $8 million. We've got an amazing team, including several seasoned mining professionals and the high-profile chairman, Brian Moller, who many of you may know from SolGold PLC and other fame. All right, apologies again. This has never happened before. All right, project overview. Hopefully we can see that. We've got just over 1,000 square kilometres, with the focus being on the Yalgoo region, which is the project.
John, annoyingly, that doesn't look like that's working. Let me, it seems to be very slow. Would you like it if I just share the presentation for you?
All fine, thank you.
Okay, no worries. If you just stop sharing, I will bring it up. There we go.
Great.
Sorry, we'll start again. I'll get you onto the corporate overview slide.
Okay, we've got a great team, as I mentioned, just under, those shares are incorrect on that slide, but just under 500 million shares, market cap about 40 million. We recently did a capital raising just over $8 million, and we've had some market attention lately. Project overview, the left-hand side at the moment, which is our Yalgoo portfolio, which all up, we have about 1,000 square kilometres. Next slide, please. So for those that aren't familiar with the Yalgoo region, it's about 4.5 hours drive. Exceptional infrastructure, which is one of the reasons it appealed to us. And you can see the large spheres on the screen are world-class operations. All of the yellow ones are greater than 1 million ounce or greater than 2 million ounces in several cases. And we have copper, iron, tungsten, lots of things going on here. And our work over the last couple of years has shown that we have a lot more geological prospectivity here than was previously recognized. Next slide, please. So all the market attention at the moment is regarding our Malaya project, and this is largely our flagship project. You can see we have the world-class Golden Grove copper, zinc, lead, gold, silver VMS project in the top left of the screen. And the rocks that are contained, that contain that and the Golden Dragon project have historically thought to continue along the left-hand side on the western side of that map. Whereas we now realize that at least some of the key rocks that everyone's been looking for go where the word Malaya is written there. And all of that is previously unexplored completely, which is pretty exciting. So if we simplistically speak, from the top of the belt to the bottom, you've got about 100 kilometers as the crow flies. And we have 50 kilometers of rocks that have never been explored. And we think there's an excellent opportunity to find some very, very serious mineralization, if not mines in this area. Next slide, please. So there's a bit of an overview of the work we've been doing. So 2 years ago, this was still mapped as a barren granite. We went out there and did a lot of field work, realized that we've got these interesting rocks that we're looking for. And then only last month, we drilled the very first hole into this entire new province at the Orion discovery. And that, as we go to the next slide, we can see had some pretty substantial results so far, visual results anyway. So the first 2 holes ever to be drilled into this project, we're drilled at 700 meters and 1,000 meters, and we got some government co-funding to assist with that. And that's so that we can understand what is going on in the entire new region. And we got, within the first day of drilling, we got 8 meters of massive magnetite, plus or minus chalcopyrite and other sulfides, as well as several other zones of significant mineralization that you can see listed there. And the second hole had similar results, including hundreds of meters of disseminated sulfides, which we are still establishing what the geological provenance of those are. Next slide, please. So here's a quick summary of, visual summary of some of the rocks that we've got out of those 2 drill holes. On the right-hand side, the first hole we drilled, you can see the chalcopyrite magnetite in the top right. In the bottom, we can see we've got massive pyrrhotite and chalcopyrite. And on the left-hand side, we even have some high-grade copper mineralization with some bornite. And there's some very interesting alteration, which is the picture at the bottom left there, which we have more news coming out in the near future on. Moving forward, we also have a bunch of drilling results pending. They should be any day now from our drilling we did in January at the Euro project. This is very exciting. There's a lot of historic drilling there. So 15 meters at 2, 17 meters at 1 gram. And we're drilling in that general vicinity. And if we go to the next slide, we can see that we now know that we're within at least a 1 to 2 kilometer long mineralized trend that was previously not recognized. So we are a very technology focused company, and this was the result of a lot of data harvesting and 3D modeling and this kind of thing. And we now know that there's a lot more going on here than previous explorers realized. Next slide, please. In addition to that, the project is quite large at several hundred square kilometers, and we have a number of exciting targets, including the perhaps unfortunately named Kiev target there. And you can see that it has a very similar magnetic response to the nearby multi-million ounce Rothsay operation, which Silver Lake Resources is operating. So we've only done very, very early stage exploration there, but we've got a lot of news coming out on that imminently as well. Next slide, please. The Tempest story in Yalgoo actually started here at the Warrior project, where there has been some very, very high grade gold mined by some prospectors. And we believe that there is an intrusive related gold system here, which is something similar to what was found at De Grey's Hemi operation within a huge alteration system. Yeah, and the beauty of the projects here is that we have a number of mills and processing facilities right nearby. So here we have a drill rig which hit several meters at 5 grams, and we've got a mill unutilized only a few kilometers away there. So we can get into production very fast if we are able to prove up some resources. Next slide, please. We also have another grant land holding to the north of there at the Messenger project, where we're right beside multiple operations, and we know there's mineralization there. We've found widespread gold there in our drilling at Easter last year, and we're looking forward to getting back and drilling some more of those targets. We also have a modest holding in the Mount Magnet region. So we're surrounded by high profile companies there, including Ramelius and Genesis, several very large companies there. And we know within our project, we have old mine workings, which are not on any government records. And the waste dumps from those shafts have gram gold material coming out of them. So we're confident that we're onto something there, and we're looking forward to drilling some of those targets later in the year as well. Next slide, please. As I mentioned, we're originally a lithium explorer, and we still retain a very strong exposure to lithium worldwide, including our greenfields projects here in Western Australia. And the Rocky Hill project, we recently completed a bunch of field work there, and we've got some news coming out on that shortly. We're also got a lot of work coming up in the next few quarters, which means a lot of news flows for our investors. And I will be giving regular updates like this one throughout the year. Thanks very much.
Thank you. Thanks for that, John. Sorry about the technical issues we had there. I know you actually just did mention this in your last slide, but the results are pending from Europe. However, what other news flow can shareholders look forward to?
Sure, we've got results from Malaya. We've got upcoming drilling at Malaya. We've got geophysics at Malaya. We've got drilling results coming from Euro. We'll almost certainly be doing more drilling at Euro. We've got results coming from Rocky Hill for our lithium project as well.
Well, John, very exciting time for you. We look forward to further updates.
Thanks, Ed.
So next we have a presentation from Vulcan Energy Resources with the ticker code VUL, a company focused on its zero carbon lithium project with a market cap in excess of $1 billion. Unfortunately, the MD, founder and CEO, Dr. Francis Vidin, is unable to join us live today. However, I'll now bring up a recording of his presentation from yesterday.
Good morning, everyone. My name's Francis Vidin, and I'm the CEO and co-founder of Vulcan Energy Resources, the world's first integrated zero-carbon lithium and renewable energy company. This presentation is available on our website, so I'll take the disclaimer as read. Please have a look at it. So just as a summary of the company, Vulcan is aiming to produce lithium chemicals, so lithium hydroxide, and renewable energy, so geothermal heat and power from the same resource, which is a geothermal brine resource rich in lithium in the Upper Rhine Valley in southwest Germany. So we're aiming to produce renewable energy and lithium chemicals from Europe for the European markets. Just a couple of points as to why this is right place, right time for this type of business in Europe. So Europe is basically the fastest growing lithium market in the world, an unprecedented build out of the lithium-ion battery industry in Europe to service the auto industry, which is rapidly transitioning to electric. And Europe is entirely reliant on imports for lithium chemicals. You think Russian gas is bad? Well, that's roughly 40% reliance. When it comes to China, we're talking 80 to 90% reliance for lithium chemicals for Europe. But in addition to that, the European automakers who are aiming to source lithium in much larger numbers over the coming years, they also want to source ethical, sustainable, and ideally zero carbon lithium as well. So Volkswagen was the first to say this. They said they will treat sustainability on par with price when purchasing raw materials for their batteries. The others have all essentially followed suit now. So this is a list of our customers here, and what they're saying essentially, sustainability is on par with price as a purchasing metric. And that's important for lithium because lithium, as it's produced currently, particularly from hard rock, is very carbon intensive. So 15 tons CO2 per ton lithium hydroxide produced. In addition to that, we have the energy crisis in Europe currently. So with the very tragic events in Ukraine, Germany and Europe's reliance on Russian gas is being highlighted. And what we do as well is produce geothermal energy. We're actually doing this right now. We are a commercial geothermal energy producer. And geothermal has a unique advantage in being able to wean Germany off Russian gas. So really right place, right time for lithium and for geothermal energy. And this is all being driven by regulation, both from the EU for zero carbon batteries, but also from studies in Germany commissioned by the German government to essentially get Germany to zero carbon electricity. So the new German government has brought forward the targets to make Germany zero carbon as well. So really right place, right time in terms of regulation, right place, right time in terms of the market for what we're doing. Here's a bit of a snapshot for what it looks like. So we really fit into the European circular economy. So we have this sort of hub and spoke model. So the hub of the wheel is this central lithium plant that we'll be building at Herx, a chemical park just outside of Frankfurt. The spokes of the wheel, these geothermal and direct lithium extraction projects that we'll be building around the Upper Rhine Valley. And these will be feeding the central lithium plant with lithium chloride concentrate. So you can see here we pump up the hot brine to the surface. We extract the lithium and the energy from the brine, and then we re-inject the brine back into the reservoir. And this fits well into the European ideal of a circular economy. The lithium can then be recycled eventually once the batteries reach the end of their lives. And we're also providing renewable heating and renewable power to local communities. The way we started, we looked for where this could be done geologically. The Upper Rhine Valley in Germany is one of the only places in the world that has the geological characteristics where such a zero carbon lithium project can be done. We have the renewable heat, the high lithium grades, and the high brine flow rate potential. It's also a very mature exploration area. It's been explored for decades for oil and gas and for geothermal. So this has given us a head start in terms of data, and we've already defined a resource of over 50 million tons LCE, which makes it easily the largest lithium resource in Europe. That's just off 3 of our licenses. We have 11 licenses across the Upper Rhine Valley at the moment. And so we're looking at really growing this resource further. But the point here is scale is not an issue for us. We can scale up with the market as demand grows, as this very large demand grows in the European market. And you can see the bulk of the demand is really coming from Germany, where we are. This is how the project works. So pumping the hot brine up to the surface, producing energy from this brine. This then gets fed into the grid as heat or power. Heating is more advantageous, but we can do power as well. And then this gets, the cool brine gets fed to a direct lithium extraction plant. Here we use commercially available technologies. This is not an R&D project. We use a technology called sorption, which has been used commercially in the lithium industry since 1996 to take the lithium out of the brine using the heat from the geothermal. That's very important. So we don't use any fossil fuels here. The brine then gets re-injected back into the reservoir. We then send the lithium chloride to lithium hydroxide plant, and we use green power to produce the lithium hydroxide. Throughout this process, our footprint is net zero carbon. It's actually net negative, but we call it the zero carbon lithium project. We have some very accomplished partners along the way. So on the sorption side, we're working with DuPont. On the central lithium plant side, Nobian, formerly part of AkzoNobel, one of the largest chlor-alkali producers in Europe. We also have a very strong team of in-house experts for each stage. So we're not outsourcing any of this technology to third parties. The IP is in-house, unique to Vulcan. This is a schematic of how the project works. So once again, the hub and the spokes of the wheel. You can see we have 2 geothermal plants which are already operating, which will be expanding. So these will be the source of some of the first lithium brine that we're processing to extract the lithium from. And then we aim to build out a series of more geothermal plants across the Upper Rhine Valley in a phased manner. These metrics, these CapEx figures that you see, these are based off our pre-feasibility study. These will change. This was over a year ago now, in January last year. So obviously markets have moved a bit since then, but also the size of the project is increasing. So we are looking to increase our production capacity from this 40,000 tons that we had in the pre-feasibility study. And this comes from some of our newly granted licenses across the Upper Rhine Valley as we step out from these existing operating zones. So really stepping out from a central part where we have existing wells from a producing part of the field, and really aiming to step out sort of north and south of that to increase production. You can see our existing, so we own this plant 100%. This is our geothermal renewable energy plant at Insheim. This will be part of the first production. We'll grow this plant. Nearby, we have Landau, which is a plant where we have a brine offtake agreement with the operator. We aim to grow this plant as well, and this will be part of the first production. And then we'll step out from there north and south to increase our geothermal production and our lithium production. The technology that we use, as I said, has been used by Livent since 1996. Rio Tinto and Eramet also going down the sorption route as well. There's obviously a lot of hype around DLE, but a lot of them are effectively R&D projects with novel technologies. Sorption is an established technology and is the best technology to use where you have the heat freely available to drive the extraction process, because the process effectively needs heat. So you can either use gas, or in our case, you can use geothermal energy to drive this extraction. We have a fully functional laboratory in Karlsruhe in the Upper Rhine Valley. This has full analytical capability. This is working with our pilot plant, which has been operating successfully for over a year now. We also have a demonstration plant, which is under construction, and that will be, first part of the construction will be completed middle of the year, and we'll build out the later stages towards the end of the year, the electrolysis part. So effectively, pilot plant has already demonstrated plus 90% recoveries, and the demonstration plant will be a learning tool in a pre-commercial setting for our lithium extraction and lithium processing teams. We will have two sources of revenue. We already have revenue from renewable energy production. We're one of the only pure play renewable energy producers on the ASX at the moment. We're aiming to increase this, particularly for heating, which is really in demand at the moment. Heating is the elephant in the room in terms of decarbonisation. But obviously the majority of the revenue comes from the lithium chemicals side of the business. We've seen a lot of hype around spot prices. We take a more conservative long-term view, probably somewhere in the 20s, so we can revise this assumption a bit upwards. But nonetheless, important to note that spot prices go up and down, but contract prices over the long term are much more stable. We've just executed our first heat offtake agreement. So with Germany's largest municipal energy supplier, MVV, so we will be supplying renewable heat to the city of Mannheim from our Mannheim license. And this is a very important enabler for our energy and lithium projects. We've executed binding lithium hydroxide offtake agreements with Volkswagen, Stellantis, Renault Group, LG Energy Solution, and Umicore. We are fully sold out for our lithium production for the first 5 years of production to really blue chip customers in Europe. These are not MOUs, these are not non-binding term sheets, these are fully binding lithium hydroxide take-or-pay offtake agreements. And this is really important for financing of our project, which will be the next stage after the DFS is completed. We should be one of the lowest cost operations out there because we're able to use that freely available heat. These figures will be updated in our DFS, which is ongoing currently, as will these figures, but we can see very attractive metrics with much lower lithium price assumptions, January last year compared to now. So there's significant upside there. BNP Paribas was appointed as financial advisor, so they're helping us with our bankability study. You can see this is our long-term price assumption used in the PFS. Really long-term price assumptions have gone up significantly since then, and contract price is up there. So a lot of upside there. A lot of risks in the project. I can't go through them all line by line. I don't have the time, but we are taking steps to control these, but important for investors to be cognizant. There's technical risk, there's permitting risk, etc. So we're working on that, and I think we're making good progress. Part of what we do, really everything that we do is related to environmental, social, and governance, so-called ESG. And it's about how we tell that story and how we show investors and stakeholders that what we're doing has a material decarbonizing effect on the supply chain. You can see relative to hard rock, material decarbonizing effect here, effectively -3 tons CO2 per ton lithium hydroxide produced. Importantly, very small land footprint as well, which for Europe is really critical indeed. I'll skip over this because I don't have the time, but just to say that we have a very strong team, both on the board and in the leadership team. Around about 120 employees now. Will be about 300 by the end of the year. That's certainly the target. So really strong expertise in the fields of geothermal energy and lithium extraction, some of the world's leading experts technically, and we have expertise across the battery and auto industries as well. So Vulcan is really building out a one-stop shop in-house. We also have drill rigs as well, which we bought 100% in-house. So a complete geothermal energy and lithium production solution. Just finally, I'll just finish off looking ahead. So we're completing our phase 1 DFS at the moment, and that is on track to be completed in the second half of this year. We'll be undertaking a financing for phase 1 thereafter. Then there'll be, with this, there'll be an updated PFS for phase 2, and then we go into phase 2 DFS and financing for phase 2. So a phased build-out approach of our projects across the Upper Rhine Valley. The pilot plant will continue to operate. The demonstration plant will go into operation later this year. In the meantime, obviously, permitting will be ongoing. Some key catalysts for us going forward, obviously the DFS, updating those numbers with a much higher lithium price we expect. Cost of materials may increase as well, so there should be something of a balancing act there. But we'll also have a demonstration plant which will be up and running, which I think will be a key sort of milestone for the company. And more heat offtake agreements as well, which are key catalysts for our project. Potentially strategic investment into the company and project in the months to come as well. We're talking to a number of strategic parties, both on the energy side and on the lithium chemical side. That's just a bit of a snapshot of our capital structure there. Strong cash position, management's very incentivized to make this work, and corporate and institutional shareholders make up about 20% of the register, including Hancock Prospecting at just over 5%. So some really quality investors in the project, and very supportive of us going forward, and strong cash position, which puts us in a good position going forward. So just to sum up, so we are a commercial renewable energy operator, generator, albeit small scale in the grand scheme of where we want to get to. We want to be a much larger renewable energy producer. We have the rigs to do this in-house. We have Europe's largest lithium resource, very large geothermal and lithium license area. We have our site for our central lithium plant secured, completing our definitive feasibility study at the moment. We have the proven ability to raise capital quickly, and we still have a lot of cash from this capital left over, which gives us a lot of flexibility. Fully sold out on lithium production, further heat offtakes to come. World's first and only zero carbon lithium project with third-party proven life cycle assessment results to back this up. Very strong team in-house, very strong technical team and corporate team in-house. And now dual listed, the first ASX company to be dual listed on the prime standard of the Frankfurt Stock Exchange as well. So we're expecting to see increased European investor interest as part of that in the months to come. So thanks very much. It's going to be an exciting few months ahead for Vulcan towards that DFS, and plenty of catalysts ahead for the company going forward. Thanks very much.
And thank you all for joining that presentation. If you do have any questions for Dr. Francis Bedeen, please feel free to send them through to info@brokerbriefing.com, and we will pass those on for you. Next up, we have a presentation from Magnum Mining and Exploration with the ticker code MGU. To tell us more about their Green Pig Iron project in the United States, I will hand you over to Dano Chan. Good afternoon.
Thank you, Jane. Hi. Thank you, Jane, for inviting us, and greetings from Reno, Nevada.
Wonderful. I might get you to just make your screen full, to share your screen full screen.
Okay. Is this better?
Perfect. I'll leave you to it.
Okay, great. So, well, first of all, thank you for having me, and greetings from Reno, Nevada, United States. Magnum and our fully owned subsidiary, Nevada Iron, is in the process of building the first green pig iron operation in the US using our own in-house iron ore and 100% biochar. This presentation is available on our website, so feel free and download it. So I'm gonna skip the disclaimer. I think a lot of investors do not understand what is pig iron. So just a very quick educational tour. We know iron ore very well, billions of tons of mined in Australia alone. So iron ore is like a flour and pig iron is the bread. And there's a little bit more work, energy is needed to make it into a cake, which is a steel product being sold for thousands of dollars. Global demand for pig iron has been on the rise. It's going to go from $5 billion a year in 2019 to forecast to go to $120 billion by 2027, and pure increase of 20 times. And the United States by far the largest importer of pig iron. So as of this moment, Russia and Ukraine produces 65% of the traded volume in the world, and the US typically picked up about a third of the global traded volume. Everybody wants a pig iron because electro arc furnace is the way of making green steel. Now, there's a pricing difference between flour and bread. Iron ore right now is about $150 a ton, while pig iron is right now just around $1,000 a ton. The demand is robust, and the pricing gap is being well above $800 to this date. We are working on to a biochar operation, which meaning that we'll reduce our carbon footprint, making our pig iron right next to our mining operation, hence reducing the carbon footprint and using biochar to further make ourselves carbon neutral to go forward. Hence, we'll become the first such an operation in the United States, if not North American continent. End of last year, Magnum has made the first green char pig iron for the North American continent. So our iron ore is mixed with biochar. The product is roasted in a rotary furnace at 1200 degrees Celsius for 20 minutes. Together with biochar, as biochar is a renewable energy source. We produce a 75% DRI after taking out the impurity as a slag. That's the first piece of 100% biochar pig iron for the market. Hold on. My apologies. Just a sec. All right, Magnum is listed on ASX. I'm the managing director of the company, and I used to run the Glencore pig iron operation in China for 3 years. And Don Carroll is our chairman. He's from BHP Billiton and Rio Tinto background for international business development. And Mr. Guy Lausier is our managing operations manager in the US. Now, this project is unique in a way that we're situated in Nevada, and Nevada is a very industrial friendly state, which because we're uniquely the first steel operation in Nevada state, so we're receiving a lot of support. And also we're sitting right next to all the logistics and power infrastructures. Hence, this project has got all the matrix ticked for its development. We will be producing our pig iron using no coal, but only biochar. Biochar pig iron is in demand currently, including us. There's only 2 such an operation under construction, including the one from Valle, Brazil. Our operation will be an integrated operation starting from mining to iron ore concentrate production. We'll be using our own in-house iron ore with biochar to produce a green pig iron. The process is a mature product process. It's been running in China, in India, and around the rest of the world for decades. So there's no moving parts except that we'll make it green by using a biomass. Our operation is unique because we'll become the only pig iron producer on the west coast of the United States. And there's actually no competition or no similar producers west of the Mississippi River. At the same time, Magnum operation is surrounded by 7 million tons of existing electric arc furnace buyers, users on the West Coast, and this is growing. On average, they need around 1.5 million tons of pig iron. Currently, there's no long-term and stable supplier. We have reported a 230 million tons of metasomatic magnetite ore deposit. Our ore is very soft, very easily to grind. At around 120 mash, we'll be producing a 63% dry concentrate. Now, that 230 million tons only come from the western part of our deposit. The entire eastern part, which is the left side of the deposit, was never drilled and never surveyed. There's an estimate that we will have significant resources going forward. We have decided to go with a 63% dry magnetic concentrate, and it's been tested. And this the process we choose, the rotary furnaces, will be able to handle a lower grade iron ore concentrate without any problems. And the pig iron we produce has been sent to major US and Australia steelmakers. The result has been nothing but excellent. Some of the comments from the buyers was, this is some of the purest pig iron they have imported. Now, we're sitting in Nevada, very close to export ports in California. Union Pacific Railway is only about 25 miles north of our operation. We have loadouts, railway spurts designed for Colado loadout and Huxley loadout. And parallel to the railway is a highway, natural gas pipeline, and the power grid. For the last year, we have completed our iron ore specification. We have made the first 100% biochar pig iron, and the sample has been distributed to potential buyers, both in the US and Australia. We have starting the design and started design of our unit train operation. And also we appointed the consultants to start the engineering scoping study. So this is the current working program. We're in the midst of engineering scoping study. The initial designs and also the financial models will be ready by July this year. And right afterwards, we'll start our bankable feasibility study. We already in the discussion with the Nevada permitting on the project, we received a lot of support. And as they said, this project should have become a pig iron operation a long time ago. So we're looking to start the operation by middle of 2025. It's all about greenness. So we're going to be replacing coal with abundant low-cost local biomass and hence make it into a biochar. Where we're sitting, we're in the middle of a lot of biomass supply. I guess a lot of people understand the fire in California. And also there's a lot of construction and the logistic waste wood currently going to landfills. And we're located only 40 miles east of the Reno landfill, which is the largest on the West Coast, to be able to take delivery of this wood. At the same time, there's an invasive species on our backyard. It's called juniper trees that drinks a lot of water, 40 gallons of water per day, and killing all its native species. And the local government, Bureau of Land Management, would love us to go out there and manage the growth, spread of this species. At the same time, we also have a local biochar partner called Biochar Now. They're currently operating in Denver. They're the only US EPA certified and ISO certified carbon credit producer in the US. We'll be working together to produce biochar right next to our operation. We're looking at a huge amount of carbon credit potential, both coming up from Europe and in the United States. California alone is requesting by 2025, 20% of all raw materials entering to California needs to come from a carbon neutral source. So to summarize it up, we have low cost in-house iron ore. The pig iron demand in the world is blooming right now, and price is forecast to maintain at above $600 to $700 a ton going forward. Logistics and power is available within a 25-mile radius. Green initiatives, we're one of the two, very few green pig iron producers in the world once we start operating, and the demand for the green products is going up really, really strong. So to make our cases a little bit clearer, Vale Brazil has announced November last year that they're going to be producing 500,000 tons of green pig iron, similar size we're going to go for, using corn biomass and in production by 2025, 2026. So that's highlight of our project.
Wonderful. Thank you so much for that great presentation. We've had a few questions come through, so I'll jump into it. So can you please provide an indication on the production costs of other pig iron producers?
That's a very good question. I think around the world, we have all agreed, even with our potential buyers, that pig iron costs around the world shouldn't be more than $350 a ton, including depreciation.
Wonderful. And just with the current geopolitical situation, more countries are seeking to secure domestic supply of raw materials. So how will MGU benefit from this?
I think the interest, industrial interest for our product has been nothing but just phenomenal. Pig iron is it's a product that's really needed by the steel industry. So if you look at the pricing chart, which I showed earlier, the price has gone up to $1,000. If you look at the other metals in like lithium or nickel, they have gone up really high and they dropped really fast. Pig iron price has been holding its place at $1,000 in the United States, and it's been holding there until today. So that just shows you that the demand is up the roof.
Wonderful. Well, thanks for that great presentation, and we look forward to further updates.
Thank you so much. Thank you for having me.
Wonderful. So next up, we have a presentation from Cannon Resources with the ticker code CNR. To tell us more about their nickel and base metal projects in WA, I will now hand you over to CEO Steve Lin. Good afternoon, Steve.
Good afternoon. How are you going?
Great, thank you. I will let you jump straight into your presentation.
All right, I have to share my screen, so just bear with me a second. Okay, are we up and running?
We are up and running. Off you go.
All right, no worries. All right. Well, thank you, everybody. This is an investor presentation from the Battery Minerals Conference of the 7th of April. We've had a little bit of an update since then, but it's essentially the same. So I'll just go through it and I'll provide that update on drilling at Sabre. We had some assays come in earlier this week, and I'll talk about that at that point in the slideshow. So just the normal disclaimers that people should read at their leisure. So investment highlights for Cannon. We've got high-grade Class 1 nickel resources. We've got two project areas that contain Class 1 nickel resources. Our Fisher East project, which has 116 kilotons of contained nickel, and our Kolyarabi tenements, which have 9.3 kilotons of contained nickel. The main focus of our work has been Fisher East, and that will remain so for the next few months. We're doing quite a lot of work there, and we have since last year. So we started drilling at Fisher East when we IPO'd in August last year. We did about 7,500 metres of diamond drilling at Fisher East. That was from August through to about December. That work has enabled us to expand the resource there. We've expanded the resources in Fisher East by 49%, up to 116 kilotons of contained nickel. That was at Muscat, where we increased the resource from 32 to 45. And at Sabre, we managed to do a maiden resource of 24.5 kilotons. So we're still drilling. We started drilling at Fisher East in late March. So we've been going about a month, and all that work was at Sabre. We've moved the drill rig over to Muscat now, and I'll go through those project areas in more detail in a second. So we're targeting expansion at Muscat and Sabre. We're picking on those two deposits because we really like what we're seeing there. I'll describe the prospects in more detail in a second. And our market valuation, around about $35 million. It is standout value on our asset base. We have the second largest asset base of all the juniors in Western Australia. The only one with more resource than us would be Poseidon. So we're in that sort of scale. So company snapshot, well, we have about 85 million shares on issue. We have three main shareholder groups. We have Rox Resources, Ponderosa, and Hawke's Point. They're our cornerstone investors. They own around about a quarter of our shares, and they're long-term holders of our stock, and they will remain so. So our share price has never gone below about 30 cents since IPO, and currently pushing up to 40. So board and management, so there's myself, I'm a geologist, about 25 years experience. I've worked in nickel and gold, VMS. Trevor Benson, Alex Passmore and Richard Bevan are the non-executive directors. Trevor's the chairman. Trevor comes from a finance background. Alex is a geologist as well, but he is also managing director of Rocks Resources. And then Richard Bevan is a company director, has lots of experience and is chairman of a number of companies in the mining space at the moment. So our Fisher East project is our main asset. We've got 4 deposits there, totaling 116 kilotons, and I've got the resource figures there. The total is 6.4 million tons at 1.8% nickel for 116 kilotons. Muscat is the one we like the most. That's 2.4 million tons at 1.9% nickel for 45.5. Now, the reason we like it the most is it's because it's nice and contained. It's got a vertical sort of plunge. It's got good thickness. The grade is consistent through the deposit. It's generally not going under about 1.9% nickel. We're getting good mining thicknesses, minimum of around about 5 meters or so, up to about 17 meters thickness. We've got high grade nickel at the base. The high grade massive sulfide at Muscat goes up to 20% nickel. We obviously want to find more of that, but it's a disseminated style ore body, and it's got a very good grade profile. So that's why we're looking at it with intensity. Kohlrabi, on the other hand, is a different style of nickel resource. That's an intrusive style, more akin to Nova or Savannah. The style of ore body is an intrusive ultramafic rock, and we get a different suite of elements. We get nickel, copper, cobalt, PGE. Much smaller resource, not so open. With the Fisher East deposits, they're all open at depth and internally as well. So Fisher East is around about 115 kilometres as the crow flies from BHP's operation at Leinster and Mount Keith. By existing roads, around about 200 kilometres from Leinster. So well within trucking distance if we want to go down a toll treating route. So the 4 deposits at Fisher East are all komatiite hosted base of channel deposits, or they're all sitting on the same contact. They're all completely open. They've got a similar sort of scale to them. They're in a 8-kilometre section of the host rocks, which is the basal komatiite flow, and which represents a seafloor position. So they were deposited horizontally underwater in the deep sea, and they have since now been folded and are standing up on their end. So you can see they've got a semi-vertical profile to them. That's because the rocks have been now folded and the sequence is standing semi-vertical. I want to talk about Muscat in particular. So here's the latest resource for Muscat. We expanded it by 44% with our drilling from last year. It's now 2.4 million tonnes, 1.9% nickel, 45.5 kilotons of contained nickel. We have the resource drilled down to about 600 metres. As I said, the grade profile is reasonably consistent right through the deposit all the way down to 600 metres, and I've put up there some key holes for you to have a look at. The key point here at Muscat is it's still open and it's still expandable. So this is just a look at the rocks at Muscat. It's a komatiite ultramafic lava. It's got nickel sulfides in it. Now it's a disseminated style of mineralization similar to the Cosmos deposit. And this hole here that I've picked is at the average grade for the deposit, 1.9. And this is very typical of what we see. So we get good grades. Where we get semi-massive sulfide, the grade goes up. So you can see a section there where it's 4.9% nickel, which is due to this little bit of massive that we're seeing in that part of the core. And this hole is from the center of the ore body. So this slide is showing us the areas coloured blue there are those areas outside of the resource that I think we have potential to expand the resource into. And those square or rectangular objects there are downhole EM plates that we have generated on that northern side of the ore body. Now that's the area we're going to be exploring. And so what I've got here is our provisional drill holes that we're targeting that area with. So this is part of our current program. We've got about 6,000 metres or so planned here. This drilling is underway now and will be completed by around about June or July. You know, we're expecting encouraging results. All the areas targeted are those areas outside the current resource. There'll be no drilling inside the current resource. So we're looking forward to those results. Going over to Sabre, 1.8 million tonnes at 1.4% nickel for 24.5 kilotons of contained nickel. Now Sabre is got a slightly lower grade than Muscat, but it's a bigger deposit and it hasn't been drilled to the same extent. So we've only drilled it down to 300 metres. Drill spacing is around about 80 metres between holes. And there's still a lot more work to be done. What we did last year is we did some drilling above the top of the ore body in the regolith, in the weathered part of the rocks. And what happened is we got a very strong PGE result. And the PGE data is shown there. The PGE data had sort of 3 high levels to it. And we thought those high levels represented down plunge extension to the ore body. So that's where we're concentrating our work. Those blue areas there shown are the areas above the 300 metre vertical where we think the ore body can be expanded. We ended up drilling these holes here. Now we've done most of these holes, including the hole that's on the above northern side. That hole has now come back and we got very good results out of that. We had 5.7 metres at 2.6% nickel in that hole with massive sulfide as well. So we now know that northern side has got ore in it, and the aim is to expand the resource here. Just quickly going on to Kolyarabi. Kolyarabi, we have about 15 kilometres of strike extent. It's an area with multiple hits of strong mineralisation. A lot of these haven't been followed up very well, and more work needs to be done there. So we're planning to get in there and start drilling this area later this year. And at the moment, we're doing a geophysical appraisal of the data and reprocessing some of the geophysical data to come up with better targets. So that's where we sit. You know, the company has high-grade resources already, 125 in total of kilotons of contained nickel, including Kolyarabi, 116 at Fisher East. All of our resources at Fisher East are completely open at depth and completely open laterally as well. We have significant strike potential for new discoveries. We're currently drilling underway at Fisher East. We plan to do about 7,000 to 8,000 metres of diamond drilling up until mid-year or so. And, you know, the aim of that is to grow the resources again in a substantial way. And we'll have that information coming in the next few months. So our price at the moment, 35 million market cap, represents an extremely positive upside on our asset base of 125 kilotons of contained nickel. So thank you very much, everybody, and I'll hand you back to Jane.
Thank you for that, Steve. Great presentation. I've got one question for you. So how big do you think each of the individual resources can be with further drilling? So there have been some impressive grades recently. So do you think this could be a 200,000 tonne plus resource?
Well, I do think we're aiming for a 200 kiloton resource in total at Fisher East. I think the field has that potential. Now, of course, we need to drill to understand that potential and realise it. But that's our expectation, and that's what we're aiming for. We're aiming for 200 plus.
Wonderful. Well, thank you for the great presentation. We look forward to further updates.
No worries. Thank you.
So next up, we are joined by Neil Inwood, the Executive Director of Apollo Minerals with the ticker code AON. To tell us more about their zinc-lead project in Gabon, I will hand you over to Neil. Good afternoon, Neil.
Good afternoon, Jane, and thank you for having me.
No worries. Let me bring up your presentation.
Thank you. Excellent. Thank you very much. Well, today I'd like to talk about Apollo's province-scale Crusoe zinc-lead project, which is in Gabon. This is a photograph of the access to our project, and we're very excited about the project and the future. Next page, please. Just a disclaimer, and please read at your leisure. This is also on our website. Next. And our vision is to realise Crusoe's province-scale potential, and also to create value as a low-carbon, responsible base metal producer. And we think that the Crusoe project and Gabon as a country are two of the vital elements for this, and I'll explain that in more detail. Next, thank you. So, as an investor, why Apollo Minerals? First of all, we control 100%, or we'll own 100% of the Crusoe zinc-lead project. We just announced 2 weeks ago the deal to acquire 100% ownership. We are looking at a province-scale deposit, large scale. So we're seeing shallow sulfide mineralisation from surface. And for zinc and lead, this is a bit unique worldwide. We are struggling to find other examples where we're seeing sulfide mineralisation from surface and shallow. Our average depth of mineralisation is about 15 metres. We've got highly positive early stage metallurgical test results. So that indicates we've got very good flotation results. We're doing more test work this year, but the initial test work is very promising. And we've also got very strong exploration results to date. In fact, just last week, we published the strongest ever mineralisation ever seen on the project, and that was from regional step-out drilling. And we're aiming to have one of the lowest carbon footprints in the market segment. The reasons for that is there's abundant hydropower in Gabon. We've got nearby rail infrastructure, and we have got low strip potential. So these three key elements indicate a strong potential for low carbon production. And we see zinc as vital to the low carbon energy future. And there's several reasons for that we'll go through in the presentation, but we're seeing zinc as a vital metal for your solar, your wind, electric vehicles, and also emerging battery technology. And additionally, there's an impending supply deficit for zinc, even on traditional applications, which is mainly for galvanization on steel. And we see ourselves as being significantly undervalued compared to our peers. And so there's other zinc explorers, for example, Rumble Resources, great projects, and we see ourselves as being significantly undervalued compared to them. And also for ourselves, which is very exciting, we've got an identified value pathway. We're in the exploration stage, which is the most fun stage. We're going into targeting, metallurgical test results, resources, and feasibility. So this pathway is the best, traditionally the best value uplift for investors. Next slide, please. And a bit about Gabon. So Gabon, not a lot of people know where it is immediately, but Gabon's in central West Africa. It's a Francophone country. It's got unique existing infrastructure. It's got one of the largest mineral ports in Africa. In fact, myself and Mr. John Wellborn were just there last week. There's an extensive rail network which feeds into the mining district around Franceville. So this is a high quality rail network which is well managed, and there's abundant hydropower, so green electricity, existing 200 megawatts with another 80 megawatts planned. And there's very good access to our project. We've got sealed roads to within about 30 kilometres and very good quality provincial roads. So you're looking at a really great package to explore and also to develop a project in. Gabon itself has a proven oil and gas sector. And mining. It's number 2. Sorry, excuse me, my bad. It's the number two producer for high-grade manganese in the world. So that's Comilog, and they use that rail network to export approximately 4 to 6 million tonnes per annum to the minerals port. Oil revenues approximately 30% of GDP, and producing 200,000 barrels. There's a growing presence of Australian companies coming into the country as well. So we're looking at FMG, Armada, Genmin. It's a great country to be exploring in. It's very safe. There's good infrastructure and there's good in-country support. And importantly for us as a junior explorer, it's got a very good operating environment. There's a modern mining act. There's been a new Minister for Mines recently appointed. And for us, we have a mining convention where we have a tax exemption for VAT, which means we do not have to pay the VAT tax on our exploration expenditure. And importantly, this is signed off before you pay the tax. So you don't have to pay that tax, unlike other jurisdictions. So great place to be operating in. Next slide, please. And I'm just going to touch on the zinc market. So there's a supply deficit impending. Indications are that 4 of the 10 major producers have less than 10 years of mine life, and the zinc producers are now looking for large-scale zinc supplies. Next slide, please. And zinc itself, it's a critical metal. New mines are essential to meet this demand, and as I mentioned before, there's a supply deficit mounting. Current demand is driven mainly by galvanisation for steel. Future demand will be by traditional applications and also as part of the essential ingredient in the decarbonising world. So when I say that zinc's going to be used for renewable energy in batteries, existing batteries and new battery technologies, renewable energy for solar and wind, I'll touch on that in a second, and also for mobility vehicles. Zinc is used as a galvanisation to stop rusting and corrosion and all these applications. And with an increase in solar energy transition, there'll also be an increase in zinc demand. Next slide, please. So just touching on that, so the power storage market alone is expected to be 34% growth in zinc demand in that market from 21 to 2030. And zinc batteries, there's new research coming out that indicates zinc batteries have the potential to capture much of this stationary storage market. So we're looking at households, we're looking at industrial, we're looking at power generation. So, and it's in a way that perhaps lithium-ion batteries can't, in that the zinc battery technology is safe and because it's based around water technology as well, won't catch on fire. And so zinc is being, additionally, zinc is being used in this galvanisation for steel for wind turbines, for solar panels. Zinc's recyclable, used in traditional vehicles, electric vehicles. So next slide, please. And just this slide just shows some of the zinc manufacturers. I'll give a shout out to Redflow. They're an Australian company based in Adelaide. No connection, but I think there's some great emerging technology as well. So next slide, please. So now on the Crusoe project. So we're talking about a province scale zinc-lead project, and we've barely scratched the surface. The mineralisation is hosted in shallow sediments. Our average depth to mineralisation currently is about 15 metres, and we're seeing across this 80-kilometre trend, which we control completely, multiple indications of mineralisation from outcrops, from historical drilling, from soils. We're lucky that we've inherited a large database from the French BRGM from the 1960s, the 1980s. They were mainly focused on lead. What we've found out in the last few years is this is a zinc-rich deposit, and that zinc mineralisation has been largely missed by previous workers. We've got 18 defined prospects, 18 areas where we know there's mineralisation or very strong potential. We've only touched on 3 of them, and we've been getting very good results to date. So we think there's province scale potential, and mineralisation is shallow. Because of the nature of the mineralisation, we think any potential mining operations will have a very low strip ratio. And I've mentioned before, significant success in recent drilling, and we've got 2 diamond rigs underway. So if I could go to the next slide, please. And just an indication of the mineralisation, we're seeing sulphide mineralisation from surface, which is very, very unusual for base metal projects. We're seeing lots of galena, which is the silvery metal we see on the left-hand side. That was the focus by previous workers. But the heart of the mineralisation here is actually the zinc mineralisation, which is sphalerite, which is that image you see in the top centre of the slide. It wasn't easily visually identified, and we are seeing in the recent drill results, in fact, 90% of our mineralisation is coming from zinc, not lead. Next slide, please. So I'm going to touch on very briefly on Dikaki, one of the 18 prospects. We've got 2 diamond rigs here at the moment. And just recently, we announced some very exciting, very strong results, 60 metres of mineralisation at 2.4% zinc plus lead from 2 metres at surface. Including in that, there was a higher grade core of approximately 30 metres at 3.6%. And this is from drilling 200 and 400 metre step out drilling from the previous workers. So next slide, please. This diagram here shows that area. So that's those holes 94 and 96. Strongest ever mineralisation seen on the project. And this is from our step out drilling. So we think there's strong potential for this mineralisation to continue to the east, to the right, and also to the west. At Dikaki, this system, there's 8 kilometres of trend. We've only drilled 1.5 kilometres of it ourselves. And that's this diagram you see here. So if I go on to the next slide, you'll see our near Bimbu prospect. So this is a new discovery made by the company last year. And we announced just recently 5 metres at 10% zinc plus lead on the eastern portion of the near Bimbu. What this shows, the high-grade mineralisation we're seeing here, the high-grade mineralisation we're seeing at Dikaki, just shows that the more drilling we do on the project, the more mineralisation we find. Next slide, please. And for the investor, what's going to happen going forward? So on this slide, we're seeing the growth in work and the pathway going forward in 2022. We've got airborne EM surveys planned which for June, and we've got additional strong drilling on our brownfields projects and our greenfields projects into Q3, Q4 2022, with an aim for next year for resource definition, further exploration and further studies. So a very exciting time for the company. Next slide, please. Just a summary on our ESG highlights, which we take very seriously. And for a company like ourselves, we're very proud to employ over 85% local workers on the project and very good local, regional and government relationships. Next slide, please. And just to touch on the management of the company, there's myself as Executive Director, ably supported by Mr. Robert Hetz, Mr. John Wellborn, Ian Middlemas, our Chairman, and our other directors, Hugo Sherman and AJ Carragel. Next slide. And just a corporate snapshot. That's the presentation for today. Just a quick 10-minute overview. Back to you. Thank you, Jane.
That was a great presentation, actually. Thanks so much for that. We've had a couple of questions come through from a Twitter attendee. So you've got the two drill rigs running. So when are the Caruso results due, and what is the campaign that you're running out there?
Absolutely. So we announced some results last week, and that was the high grade step out drilling, 200 metre. There's more results coming through the lab now, and with the lab. Unfortunately, lab delays in Perth, you're looking at, say, 4 to 8 weeks. So we're trying to push those as strong as possible. But ideally, we'd like to get a tempo of monthly results coming out. Obviously, that depends on transport logistics, not so bad. It's more the labs around the world at the moment are quite busy.
And then just finally, so which of the 3 projects excites you most?
You know what? Dikaki, where we're getting the great results, that's actually one of the easiest projects for us to access. Near Bimbu was a new discovery last year, and we've only started scratching that surface, and there's another 16. So, look, I think Dikaki is an easy win. I am really looking forward to get some more drilling get some first drilling at Afubu, which is a project to the south we hope to hit in Q3 this year.
Wonderful. With a market cap like that, it's definitely a buy in my book. So thank you so much for joining us.
Great. Thanks, Jane. Thank you, everybody.
And thank you all for joining us today. Recordings of today's presentations will be available online in the coming days on brokerbriefing.com and YouTube. But we look forward to hosting you again soon.